Numerous and contradictory statements by Donald Trump on tariffs have led to confusion. Now, tariffs on goods from Mexico and Canada will take effect not on March 4, but in early April. However, that's not certain. In any unclear situation, traders start buying the greenback instead of other assets. Under the current conditions, even the US dollar could lose trust if the US economy weakens, and the statistical data to be released on March 3 will provide a great opportunity to compare similar indicators in several countries and the effect on the currency pairs. You're watching Traders Canada. We are talking about the manufacturing PMI in various countries. For example, the Australian indicator is emerging from a contraction zone. Thus, analysts foresee a rise from the 48.2 points recorded in December to 50.6 points in February. Although its growth rate remains moderate, the upward trend itself will be a positive signal for the Australian dollar and consequently for oil prices. China, which remains the largest energy consumer, will also disclose its manufacturing PMI data. Judging by the dynamics of the previous reports, China's industry continues to expand, but very unevenly. First, business activity in the manufacturing sector dropped from 50.5 points to 50.1. And in February, it's expected to climb to 50.6. If the indicator rises, it will drive up oil prices and strengthen the yuan. The manufacturing PMI in Germany is also rising, though steadily and without disruptions. However, the indicator remains in the contraction area. In February, it may increase about 46 points. That means that Germany's economy is still far from the critical 50-point level. Nevertheless, the news is positive and the euro should respond with a rise. Moreover, the manufacturing PMI in the Eurozone may also climb up to 47.3 points. If the report meets expectations, the euro will get additional support. However, this growth may be erased within an hour when the Eurozone disclosed its inflation figures. Typically, economic growth is accompanied by rising prices, but in February, annual inflation is expected to decline from 2.5% to 2.4%. If this scenario plays out, it reinforces expectations of an interest rate cut by the European Central Bank and in turn weaken the euro. The manufacturing PMI in Canada also shows mixed performance. This is understandable given how many times Donald Trump has threatened his northern neighbor with the tariffs and the implementation dates, so a drop to 50.2 points seems logical. In this light, the Canadian dollar may experience increased pressure. In the United States, the manufacturing sector is showing growth. Since January, the indicator has been in the expansion zone and is expected to rise higher to 51.6 points from 51.2. It's still unclear whether this is thanks to Trump's auctions. For now, macroeconomic reports are likely to boost the US dollar. This is also confirmed by the report prepared by the U.S. Institute for Supply Management. Its manufacturing PMI also exceeded the critical 50-point mark in January. February figures are expected to be around 51 points. Thus, the greenback is set to close the first trading Monday of March on a positive note. Please note that the time of publications is set in a GMT plus 3. The next video review of Traders Calendar will be released on a Monday, March 3. And now we wish you profitable trading. Subscribe to our channel and follow news with us. And see you soon!